Because this teaches you, for I guess for us in particular,
Right.
how to pay yourself from your business.
Yeah.
I truly did not know how to spend the business money on my personal self.
Yeah.
So I would never take anything at all. Look at our other accounts, for instance, like the real estate accounts. How much money have we taken out for personal use?
None of it.
Because we never set up in that same structure.
Exactly.
Yo, you're listening to the Money Monopolizers podcast, helping you take control of your financial destiny. It's about time that we invest more in our financial literacy and work towards building generational wealth. If you think you're ready to do the same, then you've come to the right place. Alex, Marlon, y'all ready? Let's get this bread.
What's good, everybody? It's Alex Kamunya here, and we are back with episode 120 of the Money Monopolizers podcast, and I'm here with my co-host, Marlon Walls. Marlon, how you doing today, bro?
Doing excellent, bro. So today I'm just really in a grateful mood more than so anything else. I know we set like new accountabilities for this year, like just within our guys group. One thing that I've really been needing to do was continue to read the Bible. That's been something.
Oh, we getting straight into it. Okay.
Yeah, I mean that's how I'm doing, because that's where the gratefulness came from.
Yeah.
I'm a lot more grateful because I'm just continuously, like every morning, like I'm devoting my first 20 minutes of my day to reading the Bible, and that's really helped me become just aware of like how the position that I'm in life right now. So that's really just put me in a mood where I'm just grateful for the position, but also like good health.
Right.
Because especially like with all these variants that are coming out right now, I'm seeing some people that I know more personally, like some of my family members now are being affected
By COVID.
Yeah, so that's something that I've seen.
Who got COVID?
It's one of my cousin's mother, and she's like in pretty bad condition.
Oh, for real?
Yeah.
Dang.
So,
Is it COVID?
yes.
Oh, dang.
Like, that's why I'm saying, like, with everything that's going on around, it's like take a step back to realize like how blessed we are to be in a situation, be able to continue to do this, continue to like record episodes, but also just having good health and not really having to worry about that type of stuff.
Right.
So, like I said, I'm just in a grateful mood for everything that's going on.
Yeah, man. I think it's definitely in times like this, you gotta, obviously, when you look around and you see a whole bunch of other people being affected by stuff, you got to be grateful for even more so for what you have, especially when it comes to health, though. But what else has been going on?
That's as far as life. That's been. Let's see. I think a couple of weeks ago, I mentioned that me and my girl were going to go out to like West Texas. We actually ended up going to Austin. It was that was a fun trip that we did. We just pretty much took like that was our Christmas celebration together. Essentially, we just went out and did something together.
Right.
It was overall really well though. Like we went ATV and we went like go-kart racing, just enjoying our time. So
Yeah.
trying to find that balance between work and life, but I promise you it's like 95% work. So that was the 5%. So I ain't got much more after that. So don't ask me no more questions.
Oh, for sure. I was going to say, man, that boy been playing a lot.
Oh no, that's my. I'm picking in detail. Like, okay, what did I do? I gotta write that down. Sorry.
That boy Marlon came ready for with the life updates in the phone today.
Otherwise, we ain't gonna have nothing.
I wasn't gonna let you escape it this week.
That's fine. Yeah, that's our thing. Hey, I'm calling that out.
You ain't gonna know. You better have it ready every week.
Yeah, I need
it's coming.
Exactly.
It's 120 weeks of the same question. You better have it ready.
Yep. Everything's been going good. How about you?
I'm doing well as well. I'm happy, man, and blessed. Life is good, man. It's a blessing to just be able to be blessed and be a blessing to others. And we out here in Houston, Texas again, our second location, if you want to call it that. And I just drove out here this morning. It was crazy windy today, but
no, seriously.
Thankful to God that I was able to get here safely. It was a pretty quick drive though. I don't know, it just went by quick today, so it was cool. But other than that, I'm trying to really think. I haven't really. This week was just really like a week of continuous learning. Mm-hmm. Like every week is for me. Is trying to sharpen
that's
my.
Definitely a theme right now.
Yeah, so trying to sharpen my skills and everything like that. But as far as like personal life goes, I'm just blessed. I can't. It's nothing that I could come out here and say that's like a negative thing. So
you're right.
I'm happy. But we do have a great episode for you all today, as we do every week. Might I say so myself? But before I get into that, I must say, because I've forgot to mention this over the past few episodes, but I'm not even gonna say that. So I want to challenge our listeners to help us grow this podcast. And in order to grow this podcast, there's something I need from y'all. Now, right now, we are sitting at 254 Apple Podcast reviews. Now, I want to challenge everyone that's listening to get us to 300 Apple Podcast reviews by our 3-year anniversary, which is going to be on May 2nd. So yeah, that is 14 weeks away from today, from the day we're recording this. 13 weeks from the day it comes out, for y'all to get us 46 more reviews. There's been a bunch of great reviews we've been seeing over the past, few days and weeks, and we definitely appreciate it, man. I've so much feedback on the solo episodes. Facts. Since I mentioned it, that one episode, a whole bunch of people have told me like, yeah, man, solo episode. I'm like, yo, all right, we ain't gonna bring no more guests.
Nah, it ain't gonna come, but we are gonna put more emphasis on these for sure.
So, yeah, I mean, it's good to hear that, because again, that's the way we want to grow the podcast, based off of what we got to say. Other people got great info, but at the end of the day, it's like, yo, it's our show. So that's what we're gonna do. But like I said last time, though, we do plan to, we're gonna be going to Atlanta soon and interviewing a whole bunch of entrepreneurs over there that are killing it. We got some in Dallas lined up, of course. So yeah, it's gonna be a lot of value. Houston too, of course. A lot of value coming. Y'all's away from the guests, but right now, y'all, it's just us two, so y'all stuck with us for now. But yeah, that is the challenge that I have for y'all. 300 reviews. That is 46 reviews in 14 weeks. It's definitely doable.
So let's say we got 254 people that already rated. How many people do we get listening to us per week? That's not even including YouTube.
Like about 3,000.
All right, so we need. Let's do 46 divided by how much again? Wait, how many
weeks?
How many listeners per week?
3,000.
3,000. So 46 divided by 3,000. That is 1.53% of the people that we need to go ahead and rate and review the podcast. We need 46 out of 3,000 per week.
Oh, 46 people.
Yes. So
3,000 a week.
we're at 254. Well, I just need 1.5% of you to go leave a rating and review.
But see, I wish you wouldn't even said that, because now they're gonna be like, yeah, someone else will do it.
Yes. So why can't you be in that? Now you become an elitist though. Now you want to be in that 98 percentile or the 1 percentile of people. That's how you separate yourself. Just little things like this on a day-to-day basis that you can find. You know what? I'm not going to be in the 99%. I'm about to be in the 1% today.
Bro, that's a real life thing. Like, I think of that a lot, especially certain things in life. 2 things that always come to mind. Number one, just to go back to your point you just mentioned, the shopping cart ideology, right? So one thing, and I talked to you about this before, you probably don't remember, but it was just kind of the whole concept of doing something that has it benefits you in no way, but it's still the right thing to do. I'm not saying, leaving a review. I mean, yeah, it is the right thing to do, but I'm not trying to make that point. But like, for example, the shopping carts, right? People go to the store, you load up your shopping cart, you get your groceries, go to your car, and a lot of people just leave the shopping cart right next to their car in the parking.
Yes.
Yeah, right in the parking lot, right? Instead of literally probably walking 20 feet, 30 feet, maybe 50, 60 feet to put the shopping cart back into the shopping cart parking stall. And it's just like little things like that tell me a lot about people's character. Another one that I always see is when people at the gym, a lot of people just don't re-rack their weights.
Really?
Yeah, and it's like
I'm so trained to do it that that's actually a shocking statement to me.
No, but like at a normal, we're trained for it because we grew up playing football, and it's like, yo, we was gonna be punished if we didn't rock our weights. Like we was gonna be doing do-rights. If you know, you know.
Ooh, don't that word just has a PTSD attack.
Yeah.
God,
if you know, you know. But for the most part, like just in a normal gym, you go to LA Fitness, go to gym, whatever. Most people don't rack their weights, and it's just like, bro, it's literally something so simple. You literally finish using the squat rack or some sort of barbell and you leave the weights just on there. It's like, bro, just put it up. Why are you gonna make somebody, go do that? Or like at a restaurant, it's like, yes, there's people there it's their job to throw their trash away and stuff, but like, bro, just throw the trash away. It's your trash. Little things like that, it just tells me a lot about people's character. So I say all that to say, it's like, yo, if you're not leaving reviews for us,
all that for the review. No, seriously.
It tells me a lot about your character. I'm just being honest.
I think to your point, one of the points that you always make is how you do anything is how you do everything. Mm-hmm. And so going back to just being at the grocery store example, I always think about it in the terms of where you park your car when you go up there.
Right.
Are you the person that's sitting waiting for the closest spot and just have your blinker on, waiting 10 minutes for somebody to come out?
Just lazy.
And now you mad at the other person because they don't come out fast enough? Or are you going to say, okay, there's 2 spots up front, but there's like 15,000 spots in the back. Let me go park just maybe 20 spots further down. I'll get out the car faster. I'm at most, if I count my steps that I need to take from that 20 spots away versus the 2 spots away, I'm probably really spending this extra 10 minutes waiting for this person to get out to save 50 steps. That's the perspective that I try to bring.
And by that time, it's like you already would have been in the store.
Exactly.
You sitting there waiting with your blinker on.
How many steps are you going to take when you get into the store? Way more than that little space from the 20 spaces away to that 2 spaces to the front door.
Right.
That's all the little things that manifest that you can change from the 99% to the 1 percentile just by making those little small changes.
And that's literally the whole point of this. It's like doing things that literally set you apart, and those kind of things transfer into your life.
Yes.
It's so man. All that to say is.
So 46.
46 reviews, man.
It's very
12
feasible.
months. I mean, 3 months. Like, I'm not asking for a lot. So, anyways, now that is out the way, definitely needed to talk about that because I've been remiss to do that. But let's get into our business updates for this week.
It's time. Keep them posted.
So, Marlon, it is the week of January 15th is when we're recording this. So, halfway through the month. How's everything been? I know you've been talking about the 12-week year. Now It is now 2 weeks into that. You only got 10 weeks left in your year. How has that been pushing on for your business? By the way, I think one thing we should do is because I think we get a lot of new listeners every episode. Just when I look at the statistics, I want us to start actually saying what our business actually is at the beginning of this segment.
Yo, that's a good point.
And what we do. Just briefly take a few seconds to actually tell people what it is you do, because a lot of people just get into the business updates and just be like, oh, that's nice. I wonder what business he does.
I never thought about that. That's a good point, though.
Yeah, just kind of talk about that first.
But so for me, I'm in a rental car business. So one thing that I pride myself in is the 5-star experience within the business. So me and my dad actually partnered together within our business, and we purchased 1 car back in 2020. But right now we're at a total we have 10 cars, but we did purchase 12 last year in 2021. Right, we run a rental fleet where we operate on Turo hire car, but now we're starting to build up an offline presence too. We're working on building out the infrastructure and that platform to be able to work offline. And so that is something that is part of our 12-week year for this first 12 weeks.
You said how many cars y'all had?
We have 10 right now.
Okay, cool.
And we had acquired a total of 13 from beginning to end, but one of them we sold, one of them we traded in, one got totaled. So that's what has us at 10 right now.
Yeah.
But within the 12-week year, for these first 4 weeks, my primary thing was continuously finding ways to acquire more vehicles. And so that's where the joint venture partnerships became something that became much more prominent. And I started thinking of solutions to be able to attract more people. And so one thing I talked about a couple episodes ago was like having the small goals. If you set a really big goal, your brain is going to have to start coming up with solutions. And that's what really happened for me.
Right.
And so if I'm trying to get 350,000 on the last 4 weeks of this year, I need to have some type of strategy about getting there. And so we have to become the person that's capable of getting to that level by December of this year. So what I ended up doing was coming up with different solutions on how to get more vehicles. There was multiple ways. One of them, I started mentioning it in the morning meetup. You know, I'm a big proponent of there, and I'm always like in that call every single day. So I started mentioning, hey, I'm looking to partner with more people. And I'm looking to bring on cars that y'all may have, that y'all may, because they all know me for Turo already. They know me for rental cars. And so now if they say that if I mention that I want to partner with somebody, they're like, oh man, we know this dude. He's like, we know that he's trustful and reliable.
Yeah, you've already built your character as like someone that is, a good individual, good business person.
Yep. And so I'm actually able to leverage the fact that Dave's goal for this year is to get 10,000 members in the morning meetup. Yeah. These are all hot leads for me though.
Yeah.
Because they know me like almost on a closer level than anybody else in the morning meetup because of the fact that I'm always involved and always taking action within the group. So right now he's at 700. He started this year at 500, so it's already rolling.
200 in 2 weeks into the year.
They're
wow, he's
much more intentional now. So
he's cooking.
Me mentioning the fact that I'm trying to get more joint venture partners, that is attracting a lot of attention. So it's almost overwhelming though. At the same time,
I'm getting a lot.
That's teaching me that I need to create a better system though. At the same time of onboarding, that's a whole process in itself. And I'm learning that we're capable of bringing in way more people. And like I mentioned earlier to you, I had 2 people that were scheduled to talk to me this morning before the podcast.
Right.
So that's just showing. That goes to show you how many, what kind of leads we're getting in now. And that was just one of the solutions. Other ones were using social media, talking about it on the podcast, for instance, and then telling just in general everybody what you do, friends, family, or even like my business coach. She's one of the biggest plugs for me right now because she is networked within a lot of people that are like in the entrepreneurial space. Like when it comes to even like I think like she took him 500s. Like she was in that credit. In RPX, that's what it's called. She was in RPX. A lot of people that she knows in there are in the transportation industry, and a lot of people may either have transporter of like vehicles, or they may just have cars in general that they were trying to put on Turo, but they don't know how to operate it themselves. So a lot of different connections are coming from her, and that's just bringing us in more and more inquiries and people that we're going to potentially bring on. Last point. We finally signed the contract officially with our first partners. So now I can't tell you how many cars they're going to bring on because they're still buying them. I think, but right now they have a minimum of 5, and they're trying to get up to 10 before we start up. Yeah. We're looking to start on next Friday.
Okay.
So that's super exciting. That's going to be our first ones of this year to bring on officially.
First JV.
Yeah.
Nice, man. I mean, you got a lot going on, and it sounds like that 12-week year has been definitely impactful.
I highly recommend it, but that because I'm pretty much outlining all high value activity things that's going to move the needle in our business. So my 2 main things right now are the joint ventures, offline presence.
Right.
I focus on those 2 and build those up. That's where everything for the rest of the year is going to unfold from.
Mm-hmm. Yeah, I love it. That's a great target right now that you got. So
yes, sir. How about you? Business updates.
Oh yeah, business is going well for me. I think I'm just in a really of a place where trying to now grow other streams of revenue for the business, right? So obviously, for those that don't know, I am in the cleaning business and primarily, and I started that back in August of 2020, and I scaled that to 200,000 in the first year, and then 400,000 in the first calendar year, which was last year, 2021. And now I'm kind of focused on growing that to $1 million at least in revenue this year. Not necessarily for that number, but just because that's kind of where some of my other goals come from. So this over the past couple of weeks, I've really just been, again, I know I mentioned last time I was talking about making a big investment into marketing for commercial cleaning contracts, because I've primarily done residential. Last year we cleaned over 1,100 houses, but this year I really want to add an additional stream of revenue, which will be through commercial cleaning, and it's just a whole different ballgame. So I've been setting up systems for really finding contractors, because I contract out everything rather than using employees, and I've set up systems for now sales, which is what I've outsourced to another company, which is the $50,000 investment that I speak of. So I just actually got that started last week. Had to go ahead and bite that bullet. Yeah, but it was we're gonna see kind of how it goes, what happens, and I'm excited for the potential of it. It's just really a matter of me executing and really doing that. So I have to, of course, get more systems into place for, because essentially what I'm going to be doing is using this company they're going to be setting me appointments pretty much to be meeting with
the
commercial or businesses that are needing cleaning services for their places of business. So that's essentially what I'm paying for. So it's going to be on me to close them. So obviously sales, those kinds of things is things that I'm kind of working on. And I'm gonna have to develop systems for those meetings, because one thing about me is I'm not planning to be the one doing these meetings forever. I'm gonna do them maybe for the first few months, 6 months or something. But at some point, I'm gonna have to figure out a way to get someone else to go to these meetings for me and outsource that. Because at the end of the day, I did not want to buy myself another job. And if I had to go to meetings, even because I know I'm gonna probably get close to 100 meetings this year. At some point, I'll be like, man, I'm tired of going to these meetings.
Listen, now you preach to the choir. That's what the joint ventures are for us.
Yeah,
each one of those are a meeting.
Exactly. And so I don't want to do that. I do not want to have to do that. But in the beginning, like I always say, you do everything, figure out how it should be done. Now you create systems around it so that you can get a ordinary person and make them look extraordinary because of your systems, not because of their qualifications, but because of your systems. So that is kind of my mentality now. But I have to develop a whole lot of systems around this whole process. Especially the biggest thing for me is going to be making sure we have reliable contractors to give this work to. And so I have my staff, set up some systems for, pretty much finding contractors and cleaning businesses, because it's different from residential, because residential you can utilize individuals, right? Mm-hmm. So it's a little more lower hanging fruit, I guess you could say, as far as finding labor. But with this, it's a lot more professional, because you can't just have a random person in there cleaning the whole building. So they got to have a real business. So that's kind of something that I got to figure out. And again, there's no blueprint for this. I am creating a blueprint for this, because this is essentially another business. And that's how I look at it. That's how I literally run the accounting, which we'll talk about today. For the business, I literally treat them as two separate businesses, because everything is different about them, because it's just a completely different model.
Did you set up a new bank account for that too?
I don't necessarily have to set up a new bank account, but just in the sense of the way I actually allocate funds. Okay. It's different because the pay is different and profit is different based off of this and this. It's a lot. It's very convoluted, but
if y'all saw these spreadsheets though,
yeah, if y'all, the spreadsheets go nuts. The spreadsheets really go nuts, and that's like, I think that's just because we're engineers, so
that's a fact. I'll be thinking, I'm like, bro, if I show all these to either the podcast or just to our students, they will go crazy. Like, okay, yeah, that's too much. I'm good. I don't want to do nothing.
Right.
They're like, you can use this in any business though. It's not like it's just for the rental car business or for the cleaning business.
Yeah.
This type of structure works in any business, and that's kind of what we're going to get into anyway today.
Yeah.
But I guess that really caters to our strength as engineers though.
Oh yeah, and that's like, everybody has some sort of unfair advantage.
Facts.
And look, it's just what we happen to, we're very analytical. We're very, detailed, logical, maybe to a fault sometimes, but it just is how we are. So we use that to where it best suits us. And it definitely helps a lot with, as far as accounting and things like that, and really figuring out how your business should be structured in the sense of your money allocation, income allocation, revenue allocation. And so having good solid spreadsheets really helps a lot when you're doing your taxes, everything, bookkeeping, everything. Like it literally saves you when it comes time for taxes. So in bookkeeping, because you have everything recorded and it's very systematic. So anyways, yeah. But if you can't do it yourself, find somebody that can, and you let them do that for you. It's not an excuse to say, dang, I guess I can't do that. I'm not an engineer. It's like, dude, you literally don't. It's not because we're engineers. It's because we just are like numbers.
Some people are really good at marketing, so that means they may not need to go hire a marketing company because they can do it. But they may be bad at bookkeeping and bad at organization, so they need to hire that out. What we're doing is finding who knows what we lack in, what we don't know. And so you build a team around you based off of that. That's why you don't build a team based off proximity. You don't get your mom, your sister's cousin, and all that, or whatever. You don't get the family members and the friends that to be in your business because they're close by. You need to figure out, what are you good at? What are your strengths and weaknesses? Figure out, and once you identify those weaknesses, but you still want to move within the business, fill in those weaknesses with the businesses or the people who can pretty much fill in that place for you.
Exactly. So yes, man, that's key. So yeah, as far as business for me, it's been going well, and I guess for this month we're at like 47,000 so far for the month of January. So we'll probably get, I don't know, around 60 grand this month. So it'll be again, continuing pushing that momentum forward from last year, and really trying to really build up of every month. I'm not gonna lie, every month it gets a little bit it'll get to because I kind of have a sense where it's like in my head where I'm tracking based on where I'm at at the month, And every month, it's literally for the last 3 months. I'm like, dang, we're not gonna beat last month. And then like just end up beating last month. And that's again how I feel right now. I'm like, dang, I don't know if I could beat 60 from last month, but because that's how I literally compete against myself.
That's a fact.
Like,
That's an understatement fact.
I have to do that though. Like,
Yeah.
It's like, I don't know if y'all watched The Last Dance with Michael Jordan, but it's literally like I make competitions in my head with myself, and I'm like, yeah, I gotta beat that dude. So every month and I think at the end of the day, I'm my best competition. Like for me personally, I am my best competition, and it's gonna push me and continue to push me forward.
It's even funnier because you like to compete with people who are younger than you. So you're gonna let December 2021 Alex beat January 2022.
Man.
That dude a month younger.
That dude was. I am not letting that dude beat me. Don't let me turn 26 and then lose to 25-year-old me. We 26 in May.
Yes, sir.
So he getting old, but
Yeah, once you get over 25, that's everything is over.
Yo, I'm like, hey,
how you gonna see yourself?
I remember we was getting old. We was just 21
Facts.
when we started. But yeah, man, I don't know. So we'll see. I'll keep y'all posted as far as what January Alex is able to accomplish. So, but yeah, that is business updates. We do have an episode for y'all today, and I guess so. The episode today was really gonna be something that is gonna be applicable for a lot of people because if you're in business, if you are an entrepreneur, if you have a business, then obviously your method of accounting, I don't even say accounting, method of bookkeeping is
No, go ahead.
Oh, your method of bookkeeping is very, very important. And so for us, one thing that give me a second here. One thing that I really found out about last year is just this concept that we're going to talk about is super like simple, but it's very groundbreaking. Very simple, very groundbreaking. If I love things like that because it's very easy to implement and you see a big change. This strategy we're going to talk about today is called Profit First. So this was inspired by a book that I had read. When did I read this book? It was like actually December or January of last year. And so, I'm always trying to find different ways to improve and, just make things more streamlined. So I read this book called Profit First by Mike Michalowicz. Shout out to Mike Michalowicz. Dude is legendary for this. And it's this whole concept of profit first, right? So I told Marlon about this book last year. Marlon read it as well. And we both implemented it into our business. And it has been super profound, like by a huge amount. And so what we want to talk about today is kind of how we implemented this strategy, what it actually is, and how you should implement it and why you should implement it into your business as well. And so this whole concept of profit first is really, just based off of the concept of there's a very fundamental, bookkeeping practice that most people follow, which is income minus expenses equals profit, right? Or sales minus expenses equals profit, or revenue minus expenses equals profit, right? Sounds logical. It sounds very logical, but this whole concept of profit first is instead of first taking away your expenses, you first subtract your profit, and that will equal your expenses, right? So income minus profit equals expenses. So as we know, typically what happens with most business owners, most people in general, most people pay their expenses first, right? So in your personal life, in your business, most people pay their expenses before they pay themselves. And I'm a big advocate of the principle of paying yourself first. This is in your personal life, and this is now especially in your business, right? Because essentially this whole concept of paying yourself first, we talked about this a lot in our early episodes. I have YouTube videos about this, but essentially what it does is it allows you to really make sure that you're taking care of the things that are going to grow your business first before you pay everybody else. Because what happens is in our personal lives, people will get paid and then you'll pay all your bills, and then you're only going to leave what's left to yourself, right? When in reality, all you're doing is you're taking care of everyone else. You're making sure, people get paid. They making sure, AT&T, they make sure Walmart, they making sure, all these stores and businesses are taken care of and they paying their bills versus paying themselves and taking care of themselves first. So this whole concept of profit first in the business is really about paying yourself first. So when you take, you know, in your personal life too, right? If I get paid, I make sure I put anything for my savings to invest first. So this is the exact strategy that we were using to really early on save up to buy our first property, and also just in general for our daily bookkeeping. Essentially what you do is, you know, you take what you need first. And so in business, you take your profit first, and then you pay your expenses on what is left. And so that's the whole concept. Now we're going to talk about kind of why this works, but you know, before we get into that, what do you want to add to that?
One thing I really liked about this philosophy of profit first was understanding the difference between the business profit and what you're actually paying yourself. That was probably one of the biggest things that I didn't understand when I first.
Yeah, you did kept mentioning that. I'm thinking of it.
I never understood what he meant by that. When he said profit, I'm thinking, okay, so this is how much I'm paying myself. That was incorrect.
It's not profit.
Profit is the business can make a profit. Think about like big businesses. This will really help me see it in face value, or like for what it really is. Think about a big business. Let's say a dividend paying stock, for instance. Somebody who has a business and they have shareholders within that company. They're going to report a profit every quarter. And then from that profit, they're going to be able to distribute dividends to their shareholders. That money is coming not from just the operating expenses. That's coming from the profit. And we're going to get more into like how that works. But that really showed me like, oh, there's a whole pot that they have called profit. And now that's what the shareholders get in pretty much distributed funds in the form of dividends. That makes more sense to me. But now you're pretty much taking that mentality or that methodology at a lower level, but starting there. Because it may not even be significant in the very beginning, but it's the principle of it all that matters. It's the fact that you are doing it, building that repetition up, and setting yourself up as a big business from day one, as opposed to hoping to get there one day. And that usually doesn't. Big businesses don't start off as don't end up as big businesses. They start off as big businesses. So that was a big difference for me, and I understand that. Like the owner's compensation, we're going to get into all the technical terms, but what you're paying yourself is a different pot than what the profit is. So that was what I had to learn from reading that book. Right.
So essentially what people need to understand, I think, is just a fundamental like misunderstanding of the logic of business structures in general, is that a business is a separate entity from a person. So a business has its own EIN or TIN, tax identification number, in the same way a person has an SSN, a social security number. So you as an individual, you're compensated for, you know, what you do anywhere. If you work somewhere, you're compensated. That entity, your SSN, records a income that is now reported to the Internal Revenue Service. And in the same way, a business, when they are compensated or paid for what they do, they record an income on their EIN or their employee identification number, right? And so now that is reported to the IRS. And so essentially when you understand that, now, okay, the business pays the individual, and then what's left is now the profit after the individual has been paid, right?
Yeah.
So Jeff Bezos, Elon Musk, Mark Zuckerberg, Larry Page, all these guys, they're not getting paid based off of the profit. Their salaries and compensations is already built into the business. So that's a projection that's already in there. It's already accounted for before profits are already announced to the public, right? And so that's what people need to understand. And so this whole concept of profit first is really so you can understand how business actually works in a financial sense.
Yep.
And how to actually structure your business properly so that you can continue to see growth year over year. Because if you're not making a profit, your business is not growing. Just keep it 100. Like if you are not seeing an increased profit month over month, year over year, quarter over quarter, your business is being stagnant and is not growing. So this is going to help you really understand, how to actually make sure you're making a profit as well. And so I know a lot of people are listening to this right now and they're probably thinking, okay, this is not going to even apply to me because I don't have my business. But see, that's actually the good thing, because the fact that you don't have your business means you haven't been tainted by doing anything the wrong way. Because logically, what most people do is they want to do the sales income minus expenses equals profit. But instead, now once you understand this, you can now go into it the right way. Like I said, I started my business. And I feel like I started my business in August. I didn't start doing this till December. So to me, I was like, I was 3 months late to like figure this out and actually do this. But once I figured it out, it was like implementation immediately. My business was still very young. It was still very small. So it was pretty simple to implement this. Now, if you don't have a business, just listen to this episode still and understand this concept, because you need to apply it to your business. And so if you do have a business, you definitely need to listen to this so that you can apply it to your business as well that is already existing. And so what I really want to do to start off talking about this is really the principles of profit first, right? And so I think the biggest thing to understand really is that this whole concept, the reason it works is because everything is allocated, right? Everything has a certain allocation, meaning that there's really, in general, when you have a business, or really when you have, I'll just refer to them as entities, right? So a person and a business is an entity. So when you have a business, or when you are a person, you receive income. So when you receive income, that is the big pot, right? That's where everything goes first, your income. Now, from there, it's almost like literally like a Thanksgiving dinner. Like, you have a pot, stuff goes in there, and then you can make smaller servings from that larger pot. And so with this concept of profit first, you have an income, and we'll talk about it, but there's multiple, accounts that are essentially set up to give you these allocation pots, which they essentially are. So you have your income account, and you have, your operating expense account, you have your owner's compensation account, you have your tax account, and you have your profit account. And there's other ones depending on your business, but those are like the four main ones, right? Mm-hmm. And so briefly, obviously, income account is going to be where the income goes, right? So when money comes into the business, it goes into this account. Now, the next account is going to be your profit account. That's the most important account. So now money comes from there, from income, and a certain part is allocated into profit. And we're going to talk about all the allocations and stuff, but a certain part gets allocated into profit. And then from there, so that takes care of the profit account. And then you get an allocation for your operating expenses. That takes care of your operating expenses. You get an allocation for your taxes. That makes sure your taxes are covered. And you get an allocation for your owner's compensation. That makes sure that you are covered for the work that you've performed in your business. And so what happens is a majority of people typically allow the majority or the most of their income just goes straight into operating expenses initially, because this is what happens. And the reality of it is most people really only have one bank account.
Right.
That's like, what I was about to hit on. Most people literally have one account. You have like, and it's so crazy because it's so simple, but it's like when you look back on how you actually did it, it's like, how stupid was that to actually run accounting? Like you maybe had one savings and a checking account. So I would have money come into the same account and leave the same account. How do you know how your business is doing when you literally just have one account? It's crazy. And so this whole method of, profit first allows you to really focus on being profitable. Because when you have one account, you don't know if you're profitable. There's no way you can know if you're profitable. How do you know? Though, because you're going to look at your bank account and be like, dang, I got a lot of money in there. 90% of it is going to operating expenses, taxes, and, what you might pay yourself. There's no profit. There's nothing left. So, I don't know. It's that simple little thing really just changes it. And so
the premise of it is understanding how to operate on less than what you normally would. Because if you ever have to account for 3 different accounts between the profit, the owner's compensation, and the taxes, that means that operating expenses can't be 100% no more. Yeah. And if you've been operating your business, spending all of your money on everything within the business, I understand reinvesting is one thing, but you have to make sure. But you have to be more efficient with where your money is going. You have to be much more intentional. Now you have to look every single month and say, where did my money go? Because if my operating expenses, let's say I allocate 70% to operating expenses. If I was spending 75%, now I got to figure out what's that extra 5%. How did that get there? And am I able to trim the fat anywhere within my business? This allows you to be able to see if your business is dying. I think that's probably one of the biggest things. If your operating expenses is like I said, if it's 70% and you're always at 75, that means that you keep on contributing only 70%. You're eventually going to run out of money. And now this puts it at face value to show you that your business needs to have some sort of revelation, some type of change in how you operate in order to remain profitable. Or you have to increase your operating expense budget, but that takes away from everything else. So this is really teaching you how to be more efficient within your business.
Yeah, man. And that's thing about it is efficiency. That's the biggest thing. It's not going to necessarily, this doesn't make up for you not being like not being a good entrepreneur. Like you still have to know sales, marketing, all these other things, but it will help you have a clear vision on how your business is doing. And one thing that this, for me, you know, the reason this book was so profound for me though, is because it really gave me a clear path on financial freedom for me personally. Like
that's a big fact.
Man,
oh my God.
This book, honestly, for me, wasn't even called Profits First. It was called Owner's Comp First.
Yeah. Seriously. I really got a lot on that. That's good. That's good. Keep going.
Because for me, like when I read this book, like I was operating my business like a fool too. Like I got to keep it 100. I had the one account. I had the savings in the one account. And it was like, I ain't really know. I never really knew kind of like how I was going to achieve financial freedom, because I didn't necessarily know how, like I knew how my expenses were really going, but I didn't know how much it would take for me to actually like get there. Right. If that makes sense. So for me, having like an owner's compensation really made it really clear, because it's like, okay, now I'm basing my business, Loki, is based now off of my owner's compensation. Because that's the goal, was financial freedom. And so for me, once I set my owner's comp to be, you know, yo, this, I need to allocate this amount into, like, you know how I do it.
Man, listen, you know on the same page.
Keep going. Like I literally set my percentages, so the spreadsheet. I'm not gonna get the spreadsheet, but you know, my spreadsheet is funny because I do like you do like you set percentages, right?
Yes, we do the same thing.
So,
I promise.
Oh, I thought I did it the other way, because I know I would
actually no. I know what you're talking about. Yeah, so, keep going.
But they don't understand what we're talking about.
We just over here laughing. Because you know the listeners.
Right. You'd have to see it. But like I literally I'm pretty much trying to say, I set my business up to like make sure like, yo, all right, I need this amount of money this month.
That's true.
So I'm gonna make sure that this amount is set, and then like now I can figure out how I can operate the business off the rest.
Right.
So so for example, let's say, you know, when I wanted to replace my income from my 9-to-5 job, I said, I'll just give an arbitrary number. I said, let's say I need to make $10,000 a month from, you know, to replace my income from my 9-to-5 job. Then I would set like, yo, okay, 10,000 for owner's comp this month. Now I need to figure out how to make the business, you know, run, you know, based off of that.
Yeah.
And that is why it was so profound for me specifically. Like everyone has a different kind of revelation when they read this book, but that was the biggest thing for me, because it told me exactly how long it would take me to reach financial freedom and how much revenue I needed to generate every single month to replace my 9-to-5 income and ultimately hit that financial freedom, and still be able to grow the business profitably, and also have money set aside for taxes, and have my operating expenses taken care of, and have my staff paid, and be able to continue to reinvest back into the business. So that was the biggest like windfall for me. It was just understanding that like, wow, this is how you actually take care of yourself in business. And be able to honestly, that changed the game for me, because it was like, oh, I'm excited to grow this business now, because it's not just having one big pot and I got to figure out how much I can like allocate to myself this month after I've paid all the bills.
I thought I was getting chills right there, because this is the profound part of the entire book. Owner's Comp First should definitely be the name, because that teaches, no, seriously, for me as well. I'm thinking just in general, because this teaches you, for I guess for us in particular,
right,
how to pay yourself from your business.
Yeah. I
truly did not know how to spend the business money on my personal self.
Yeah.
So I would never take anything at all. You and like we all say, you should definitely be not taking a lot in the beginning anyway, to really like leave most of it in the business to continue to reinvest.
Right.
You have that option. But I look at our other accounts, for instance, like the real estate accounts. How much money have we taken out for personal use?
None of it.
Because we never set up in that same structure.
Exactly.
And that's how I was operating every business account. So I'm like, I don't know how to pay myself. But there's two foolish ways though. One is the way we were doing it. We wouldn't take anything. But another way is the way that most people do it is they take all of it. They don't separate the business from the personal. They just, whatever the business brought in, that's my money to spend.
Right.
But that's why you want that's why our structure works the profit first structure works so much better, because now you have accounted for owner's compensation. You know how much to pay yourself, and you also have set aside for taxes already. Because what's going to really mess you up is if you spend a whole bunch of personal money or personal spending from your business account and don't have no money left over, and tax time comes around, and now you're going to be sitting here with a big bill that you have no money to pay it with. That's what makes the profit first strategy so profound.
And the reason this really works is because when you really allocate to profit and owner's comp the way you should, and taxes, this makes you want to limit expenses as much as you can. And it's like, okay, I need to make like, dang, it makes you a lot more aware of like where your money is going when your business
part.
Exactly, because you know, like, it's a pot. Like anytime you add to this, it's a give and take. Like I can't have, if I only have 100%, I can only have 60% in OpEx. I can only have 15% in taxes. I can only have 10% profit. I can only have 15% in owner's comp. So it's like it makes you want to continue to grow profit and owner's comp first. And the thing about that is because those are the things that are rewarding. Right, the profit and your owner's compensation.
That's why we're building a business. It's not building it to grow operating expenses.
Exactly. So the goal is to like continue to grow that part of the business that makes it, because the profit to me is like, the profit is good, and the owner's comp, like that is the part that's like, man, it makes me just want to like, I don't know, keep growing the business. It makes me motivated, and it gives you just peace of mind about like, man, okay, like I can literally just look at my bank accounts and say, oh, my business is doing good. And it's like, I know operating expenses is taken care of. I know taxes is taken care of. I know, the profit is taken care of. I know I can reinvest back into the business. So, it gives you really a clear indicator of how your business is performing. So, that is the thing about this. And so what I want to talk about now is really how to actually set this up and how to actually go about doing this, right? The applicable way. And so the biggest thing obviously is first making sure you get your bank account set up. So we're obviously not going to talk about everything in detail. You obviously got to go.
Yeah, I would recommend reading the book. Read a book yourself.
Yeah, and if this wasn't enough for you to go read the book on yourself, then I don't know what to tell you. But definitely go check it out yourself. But essentially, what we're going to be doing is you're going to be setting up 4 bank accounts first, and then. So I want to talk about a few of those bank accounts and kind of how it works for me as far as like allocations and stuff like that. And so I personally in my business I have, I think 6 bank accounts. Everyone's is different. So
I thought it was 5 based though, but continue. You might.
Yeah. So me personally, I mean, I'll just say how I set mine up. So obviously income is the number one. Then you get your profit account. And then you have your owner's compensation, and then you have your operating expenses, and then me personally, I have a staff pay, and then I have a tax account.
Right. So yeah, the five base was minus the staff pay. So you have tax account. So that's 5: income, profit, owner's comp, operating expenses, taxes.
So 6.
Well, then you have staff pay.
Yes,
that made 6. I know. I'm just saying there was 5 base. You said 4 earlier.
Oh yeah. Well yeah. Okay. So yeah, if you want to count, that. So. But yeah, that's how essentially you would set yours up, and it's really simple. You literally go to I use Chase Bank, so Chase makes it very easy. I don't know who y'all use, but it makes it very easy. In the book, here's the thing, he suggests things in the book, and this is why you don't take everything exactly how it is. You do what works for you. Me personally, one thing he talked about in the book was a profit hold account.
Yes, and he had two hold accounts.
Yeah, he had a profit and a tax hold account, and so essentially he says to set up savings account at a separate bank, and transfer profit from your number one bank into your separate bank, and from your number one tax account into your second tax account. Now, the reason he says to do this is because most people don't have self-control, and they're not able to not pull from that profit account to pay their expenses. Me personally, I ain't touching that profit account, bro. Like my profit account, if I look at my bank statement, it'd be addition, and then a random subtraction when I want to I don't know, pay something like buy Bitcoin or something like that. And it's like I'll use that sometime at some point. And so but that's when you got to know yourself.
Yes.
I'm not telling you not to do that. I'm just telling you, me personally, I didn't have to do. That's why you got to go read the book. But I know you had probably felt similar just in that sense.
Yeah,
too.
I definitely didn't do that. Like, we don't touch so he says make a tax hold account and a profit hold account at a separate bank. That way that you don't even see those two accounts when you're doing your day-to-day operation. So you don't even have the option to pay your operating expenses from one of those two accounts.
Mm-hmm.
The thing is, if you have the self-control, you don't necessarily have to do that, but you can make any modifications to anything we say, anything he says in the book. This is just how we made our own modifications, just because we didn't want to have to set that up as well. And we knew that we had self-control to not do it. Now, if you don't have the self-control, I 100% recommend it. Get a separate account at another location where it's only a savings for taxes, another savings for profit. And then that's it. And you don't even see those two bank accounts when you're doing your distributions from the income to the other accounts.
Yeah, I would suggest most people probably do it because I think most people. That's why he put it in the book, because most people are just
He's
like
talking
that.
to most people,
right? So I would suggest that. So the next thing after you obviously have your account set up is figuring out your allocation percentages. So in the book, he kind of refers to current allocation percentages, which are, he calls them caps, and then you have your target allocation percentages. Now, I would say most people probably don't even have caps, which is current allocation. Most people don't even have allocations for their things already. Yeah, people just like, have, again, that one pot and pull from the one pot. They don't have separate little pots. But now, essentially, what you need to do is start off with like what do you generally spend? I think the best way to do it is figure out what do you right now spend on your expenses in your business. Once you figure out what you spend on your expenses in your business, take that. So you have your, let's say, revenue, and then how much per month is your, and that's how I do mine on a monthly basis. Again, so I don't know how some people do it, but I do mine on a monthly basis. And so after you have your sales or your revenue, figure out your expenses, and that percentage, like you obviously divide your expenses by your sales, and that number is going to be your current allocation percentage, meaning how much you're currently allocating to your expenses. And then from that, whatever's left over, how much are you allocating towards paying yourself? How much are you allocating towards putting away for taxes? And how much are you allocating towards profit? Most people are probably, I don't know, they probably pay themselves, I don't know, whatever. Maybe let's just say 80% expenses, 10% owner's compensation, and then maybe, I wouldn't even say taxes. I don't even think most people put away for taxes.
I would say just 80-20, that'd be
honestly, I would.
Because what else they putting it to? Profit or taxes? Which one?
Yeah, that's true. They're not putting it to nothing. Yeah. So yeah, it's probably 80-20. So what essentially you need to do then, if you are 80-20, is now you need to create what's called a target allocation percentage. So this is, he calls them TAPs. So now a target allocation percentage is essentially, what do you want to be, this percentage, what percentage of your revenue or your sales do you want to be going to your profit, your owner's comp, your taxes, and your operating expenses. So obviously everything's going to be based off operating expenses initially, but the goal is to now slowly decrease operating expenses and increase profit, owner's comp, and taxes to a degree. And now, I mean, you're probably starting off at 0, but just start off with something small, a very small profit number, 1% even. 1%. You can do 1%. Like, you can find a way to make 1%.
If you can't operate on 99% of your business,
you should be in business. You should not be in business.
You really need to do an overhaul on figuring out what's going on with your business. If you can't put away 1%, you got to figure out a way, man. That's number one.
Yeah, and so essentially the whole concept is, once you can if you can get 1%, now you can figure out a way to get 2 or 5.
Yeah. Slowly
but surely. And it's not to say like overnight, literally you go from 0 to now you're doing 20% owner's comp, or, I mean, you already are, but 20% profit. Right. So the goal would be to slowly increase it. And so what he recommends in the book is, and this is not even what I do. Again, you do it the way you want, but it's to really slowly every quarter increase your profit and your owner's comp and your taxes by 1%, really your profit by 1%, and then decrease your operating expenses by the number of other accounts that you have. So if it's, let's just say 3%, just to keep it simple. So you would decrease operating expenses 3%, increase the rest. So this is kind of slowly but surely. So after a year, you'll eventually have, hopefully, I don't know, 60 or 60% OPEX, 15% owner's comp, and then you have what is that, 85 or 75, and then you have I don't know, 10% profit and another 15% for taxes. So that would be ideally how it would end up, but it happens slowly because again, you've been doing it wrong so long, and this is why it's so good if this is brand new to you and you haven't gotten to business yet, because this will give you a foundation to like operate your business the right way from day one. Like literally, it's the most groundbreaking thing. So that's like essentially how you would get it started.
Yep, if I remember correctly, then I think he actually recommended the same amount for taxes for every increment that you go up. Like no matter what, I think he always had the base number at 15%.
Right.
That's because he also recommends make sure you get a good CPA that can look through your entire yearly expenses and revenue, income and expenses. Make sure that you can find different tax deductions for that one. Don't consult us, consult the actual CPA for that.
Right.
But 15% was his number that he used in the book, and what he did was change the operating expenses. I can't remember the exact number, but he did start off pretty high, like around 70 to 80% was the operating expenses. So now you need to figure out how to change. You need to figure out how to increase the profit and increase operating expenses slowly but surely over time. And that's like you said, that's the most gratifying part of it all, is to be able to support yourself and show business profit from your business. You're not getting into business to grow operating expenses. You're in business to be able to support your own lifestyle. So just to put it back into show you how we're using it, the goals that we set come from this formula right here. Yeah. So when we're saying, like for me, for instance, I mentioned that my goal is to be able to hit $350,000 in revenue by the final 4 weeks of this year. I put into a 4-week format rather than a monthly format, because that goes to the 12-week year model. But that number comes from what I want to pay myself from owner's comp. And my number that I do for owner's comp, we do 20% on average between our two businesses, between consulting and the the rentals. That's how we do ours for owner's comp. So if I'm at 20%, and me and my dad split that in half to 10, I need $35,000. That's how that number came about. So now
you need $70,000.
So you need $70,000 from owner's comp in general. And then we split that up afterwards. But that's from those two separate businesses.
Right.
But that's how that all came about, though. So now this model allows you to backtrack and figure out, how much do I want to pay myself? Like Alex was talking about earlier. He starts off with a number, what I want to pay myself per month. And then you have to figure out what does my income need to be, or how can I lower my expenses to make sure that I pay, I'm able to pay myself that much. Those are your two different ways of going about it.
And that's why it's so big. Because one thing y'all hear me talk about a lot on the show is how I need to get to $50,000 a month in income to myself. Y'all hear me say it. I'm not worried about the $5,000 a month I can make whatever right now. I'm worried about the $50,000 later. That's where that's coming from. It's the $50,000 is coming from the owner's comp that I'm trying to pay myself. So it's a certain percentage of the revenue. So for me, I know how much revenue I need to pay myself that and still operate my business and still have profit and still set aside for taxes. And that's why this is so good, because it gives you and this is why I said it was big for me, because it gave me a clear framework to say, I just need to get my business to this point to replace my income from my job. So once I get my business to this point, I'll be making this much. My taxes are covered. My business is covered. Operating expenses covered. That's what I need to get to. And that's literally how I got financial freedom. It was literally because of that. And so, again, it doesn't make up for not knowing business, but it gives you a framework. You can have all the accounts, but you need money to come into them. So that's the most important thing here. And so now I know it's like, okay, I know exactly what I have, literally targets for every year, every month, where it's like, okay, by this month, I'll be having this much in owner's comp. By this month, I'll have this much in revenue, et cetera, et cetera. And so, but early on, I think, so in the book, he talks about like the different, he says like, it gives you a way, it's a good way to start is like, he gives you the table based off of the revenue that you're generating. Mm-hmm. So if you're generating, he says from 0 to 250K, if you're generating that amount of revenue, then your profit should be like 5%. And then he says if you're doing that, like your owner's comp, but this was super high to me, but he said it would be 50% if it was from 0 to 250K.
Yes, I remember that.
Now, if you can make it work, by all means,
you can take 50% from your business to pay yourself. In the very beginning, I personally recommend that.
I think that's a digital product business. Like that is like you got no overhead because he said his OpEx was like 30%. on that account.
Yeah, that was
I was
crazy.
like, yo, how are you getting it that low? And his taxes.
So he actually did it inversely then, right? So he had low on operating expenses at first, and it actually increased.
Well, that was for his target allocation percentage for 0 to 250.
Okay.
So for the lower, he essentially is saying the less money the business makes, the higher the percentage for owner's comp.
I remember something else too. Go
and
ahead.
so as your business makes more, so he says between 250 to 500 in revenue, your profit is 10%. Your owner's compensation now decreases from 50% to 35%, because obviously 35% of a bigger number is still a lot more than 50% of a smaller number, right? And then obviously taxes is still 15%, and then operating expenses increases a little bit. So for me, the biggest thing for me is I always keep my taxes at 15%.
Yep.
No matter what, the taxes, I don't mess with that. Like that's always stays at. Sometimes I'll be like, I could probably get away with 14 this month, but like,
with an extra 1% going.
I don't know. Maybe it's like I just need to. I added an expense or something to the business, and so it's like, or I might want to make up for something that I did the previous month. I don't know. It's just, again, you operate it your own way that you want to do it. So, but I always keep mine at 15% taxes, just because I know it's like that covers me and it covers the business. So that's the thing.
That's huge.
You don't necessarily need to like worry about your personal taxes, because depending on your business structure, of course, if you're an S corp, now you have W-2 income, all those other things, consult a CPA, whatever. But generally, LLC is just really a simple transfer between your business bank account to your personal bank account, and then you're already covered because your business is holding your personal taxes. So when you file your tax return, you'll have that money already ready to go to pay your business if you owe tax, pay your business taxes and your personal income taxes. So, and I got a nice pot ready for my taxes this year, and so I don't expect to owe much, because we did lose some money, but not in the business, but in real estate this year. If you know, but that's the allocation percentages though.
And I think one thing we didn't hit on, which is also very important that he mentioned in the book, is that as your business makes more revenue, like he gave you different ranges from 0 to 250,000 was the first range.
Right.
The highest range he had was like 10 million to 50 million. What he started doing at those ranges, as you started increasing, he actually started decreasing the owner's comp.
Yeah, because it's a smaller.
It was
percentage.
twofold. One is a smaller percentage, but it's a small percentage of a bigger number.
Right.
But now he said you should be removing yourself from the business.
Oh yeah, that's a fact.
You're moving yourself. You're not doing the day-to-day task at 10 million and 50 million. What you're doing now is becoming the shareholder. You become the person that just advises the CEO. If you at that point, you probably hired your own CEO for your company, and you taking a step back. So what happened is that he started adding to the profit. The profit went from like 2% up to like 17 to 20% or something. And that's going to be where you're taking your cut from now. Because now you're taking a cut from, you may take a small percentage from owner's comp, but the majority of your money is coming from the profit.
Right. Now that's a fact. But if your business is at that level, hit me. I'm trying to learn from you.
That's a fact.
If your business is at that level already. So, and you listening to us, then hit me. We need to interview you too, honestly. But yeah, that was that. And then the last thing I think that we should hit on too is just obviously the schedule for it, which I think is very important. So every business, obviously, the way you operate your business is you do it based off of a schedule. So you do payroll based off of schedule, you pay expenses based off of schedule. So he recommends suggests a 1st and 15th of the month, where you would do your allocation. So essentially what happens is every single day money is going into your income account, every single day, right? And then on the 1st of the month, you would go to your income account and you would make your allocations. You would take your percentages that you have for your different accounts, and then you would take that percent from income and you would distribute it into those different accounts, right? And so now you have money in your profit account, you'll have money in your tax account, you have money in your owner's comp, and you have money in your OPEX, you have money in any other accounts you might need to add to create. And so you would do that, and then 2 weeks later, income has been filling up, and income money's been coming in the income account from sales, revenue, whatever. And then you would do it again on the 15th, make your allocations, whatever. So me personally, I just do mine based off of my payroll schedule, because that's what dominates my, accounting is based on, because I need to pay people. And so I pay people whatever I'm not gonna, it doesn't matter how I pay people. Whatever you do is what you need to do. And that's how you need to figure out. Again, this is just, we're introducing the topic. You kind of figure out what works for you though.
Yep. And I think that's pretty self-explanatory there. You just figure out what works for you as far as the pay schedule. I know he says first and 15th. You can do weekly, you can do bi-weekly, you can do 15th and the last day of the month. That's actually what we do, 15th and last day. But it doesn't really matter. I think everything that we said today, everything that's said in the book, that's all face value stuff. Figure out how to operate it best for your business.
Exactly.
But the framework is what's important. How you operate within that framework, that's all up to you. And that's really the basis of this one.
Yeah, bro, it's really straightforward. Like, we don't have, like, it's not really too much to get into. It's literally like, that's it. Go read the book and you be good money. So yeah, that's it for that topic. Let's kind of get into our next segment, which is going to be our Ask the Monopolizers.
How can I be successful? How can I follow the path that someone else has laid for me to be successful?
Ask the Monopolizers.
This question comes from Taylor Jones on Instagram. She says, "Hey guys, how do you balance growing your respective businesses while growing your podcast? What do you choose to focus on?"
I love this question.
This was a great question. Please start this one.
Why I gotta start it?
I usually start it, I swear.
Oh, okay. Read it again.
How do you balance growing your respective businesses while growing your podcast? What do you choose to focus on?
Yeah, so that's a great question again. And the reason this is so good is because for us, it's kind of like a lot of people are dealing with this too, with like, yo, you got a 9 to 5 and you trying to grow your business. So it's a similar situation in a sense of like, you know, you're doing something and you had to do something else. One thing doesn't pay you as much and another thing that might pay you more, right? And so that's kind of how it is for us in our situation too. And so the biggest thing to me is like understanding like, man, there's so many different ways to take this, but from a high level, it's understanding like, number one, what requires the most energy and what is moving the needle the most. So that's the biggest thing, like to get you to your goals first, right? And so if the thing that is going to get you to your goals first is going to be, you know, the business, then that's necessarily what I'm going to focus on primarily. If the thing that would get me to my goals first is going to be the podcast, then that's what I'm going to focus on primarily. It's because I know day to day I need to be doing the moving the needle task that for a long time it was what are the things that are moving the needle to get me to replace my 9 to 5 income so I could leave my job. So that a majority of my time was being spent focusing on the business. I was focusing on the things that are moving the needle. Sheesh. And then so
What you tweet?
Yo, that thing going crazy.
God.
That's funny. And so that is that. And then, you know, so when we have obviously the podcast and all this stuff, it takes a lot of time, but that's why it's so important to really have systems and things in your business that are going to really like give you, again, some free, like it, I've freed up a lot of time from myself from the business. And, you know, I don't spend nearly as much time in there as I used to even 6 months ago or even 3 months ago, because I've added systems and obviously I've hired people. And so it's just a function of really understanding what moves the needle and also growing your business to get you out of the business. So for me, that was kind of how, you know, I handle it. And that's how I still handle it to this day. Like obviously the podcast was growing and a lot of time goes into the podcast, but I know how much time I need to put into it to make sure, you know, obviously we get an episode out, that we record episodes and that we stay consistent. I know kind of now the rhythm and the threshold as far as like the minimum that I need to put in for that. And then anything beyond that is kind of like what we decide as far as like what we need to do to grow the show anymore. Yeah.
First, I got a lot of with this question. I love the question though, by the way. We started the podcast before we started our businesses.
That's true.
What that meant, and there was twofold with that. We have two people that are able to delegate the task between each other. That makes a huge difference. Because if either one of us had to do all the tasks within the podcast, it would be much more difficult to be sustainable while in the midst of building the business. So splitting up those tasks between both of us, between content creation, between editing the actual podcast itself, between finding different guests, between scheduling times to work with them, between recording, all that stuff takes time. And then you also have to worry about time for your business. This is why I'm so big on the fact of focusing on one thing. Because if you're trying to start a podcast at the same time while starting a business, if you don't already have some type of systematic structure on how to do things within one of them, it's going to be very difficult to carry both of them. That's why I said we start the podcast already. we already had the podcast going for a year or two before we started the businesses. So we already had a pretty much systematic process of how to do the podcast, so it became a lot easier. Well, it wasn't overbearing to do to do our business while we did the podcast, because we already kind of had a structure of how to do the podcast. That was huge though, but at the same time, we also haven't tried to really scale it because we haven't put a whole bunch of time involved into growing the podcast as we could have had we not had anything else on the side. Right. Everything has opportunity cost. If we're choosing to build the business, we're choosing to not do something else. That could be spending time with family. That could be spending time in real estate. That could be spending time on the podcast. If we took all of our energy, time, and effort that we spend into our businesses and didn't do the business at all, but grew the podcast only, we'd probably be number one already.
We'll be number one on the charts.
So that just gives you perspective, showing you that everything has its opportunity cost. So we are not putting all of our energy into the podcast. That's just straight up. We could do a lot more, but we have to delegate our energy and time wherever we see fit for that moment. So even though we're putting out episodes, we could be doing so much more.
Oh yeah.
But we have to be mindful about what is that costing us to do that.
Right. And again, that's what it goes back to. What is your goal? Like knowing what your goal is, like, and what's getting you actually to your goal. And that's going to tell you where you need to be putting time. And it's not to necessarily say it's right or wrong if you don't put time to something. It's just what works for you to get to your goal. So it's a great question, though. Absolutely great question.
Yeah.
And so if you got a 9 to 5 or you got something like that, understand it's the same thing. Now, a 9 to 5 is different because it's an obligation. Nothing that we do is necessarily an obligation. We don't have to do it. There's no penalty. Now, the penalty there is a penalty, but it's not like a direct penalty, like you get fired or you won't, be able to feed your family. So obviously there's a little more motivation if it's something like that. But obviously you got to understand, like you said, it's opportunity cost. So yeah, that is a great question. So what we'll do now is kind of wrap up the show with our last segment, which is take it or leave it.
We gave you the game. You can
take it or leave it.
So really from this episode, I think the biggest takeaway for me personally, or you can leave it, is really just, bro, set the system up. Set up the profit first system. If you don't have a business yet, at least go, read the book and learn it so that when you start your business, you do get it off on the right foot. I'm not even going to say anything more than that. It's that simple. I'm not going to even complicate it.
Get rid of that one bank account. I know you're sitting here with that one income and expenses account. It's everything going into that one pot. Get rid of it. Because I know we had to do the same thing when we read that book. We went to the bank and said, "Hey, I need 4 more checking accounts." They looked at us like we was crazy. I need 4 more checking accounts.
Yep.
And it changed the entire game for us.
Yes, because y'all had 2 people in LLC. Because I was able to do mine just single. Online.
Oh yeah, that's right. Yeah, for sure.
So, but I guess that's Chase. So
yeah, we did go to the bank though and did it in person. And yeah, she was like, 4?
Yeah.
I was like, yes, we need 4 we need 4 more, because we called that the one that we already were spending out of, or the one that income expenses were going out of, that turned into our operating expenses.
Yeah.
Everything we set up in a separate income account for everything.
Right. The fact that she was confused tells me she's not running her personal finances, right?
Yeah. So that we did it. So that helped out tremendously. So just get rid of that one bank account and go set up 4 more to go alongside it. Any other ones that you need, just set it up as you wish to. But take action. That's it.
That's it. So yeah, that is it for this episode of the Money Monopolizers podcast. New episodes will be released every Thursday and will be available on Apple Podcasts, Spotify, and YouTube. Just search Money Monopolizers wherever you listen to podcasts. We hope you gained something of value today, and if you did, we'd appreciate it if you rated us 5 stars and left us a review on Apple Podcasts. You can also find out more info about us on Twitter at The Monopolizer, IG at Money Monopolizers. We post informative content on there to keep you engaged, so be sure to check that out and share those posts. But until then, we are out of here.
You've been listening to the Money Monopolizers podcast, helping you take control of your financial destiny. To learn more about how you can be in control of your money, visit moneymonopolizers.com. We'll catch you next time when Alex and Marlon share more personal finance and wealth creation tips with you. Now it's time to take action.